Hey everyone, welcome back to Corporate Decoder. Today we are diving into a company that's playing musical chairs with its stock offerings. It's like they're trying to find the perfect price, but will they succeed or will the music stop too soon? We're going to break down WELLTOWER's latest filing, figure out what they're up to with all this stock shuffling and see if it's a good move for investors. WELLTOWER just filed a Form 8K. This is basically a snapshot of important events that the company wants its investors to know about. It's like a company sending out a press release because they made a big move. This report is dated March 28, 2025. The big news here is about an at-the-market offering. This means WELLTOWER is planning to sell shares of its common stock, which is basically ownership in the company, little by little through sales agents. They're looking to sell up to $7.5 billion worth of stock. That's a huge amount of money. This gives them flexibility to raise money as needed, kind of like having a credit line they can tap into. There's also talk about forward sale agreements. Think of this as WELLTOWER making a deal to sell stock in the future at a set price. It's a bit like a farmer locking in a price for their crops before harvest. The company won't get any money up front from these sales. It'll get paid later when the deal is settled, and that could be in cash or in shares of stock. These sales will happen in a variety of ways, including regular trades on the New York Stock Exchange. So if you're watching the stock, you might see these shares being sold over time. The company already registered these shares with the Securities and Exchange Commission, or SEC. That means they got permission from the government to sell them. They are also filing papers relating to something called exchangeable notes. These are special bonds that can be exchanged for shares of WELLTOWER stock under certain conditions. It relates to up to 23,440.19 shares of common stock. There's also mention of something called downright units. A downright is a type of real estate investment structure. Basically, some people have units in one of WELLTOWER's downrights, and those units can be exchanged for WELLTOWER shares. The number of shares that might be issued is 390 bacha. Also, some people have units in WELLTOWER OP, which is an operating partnership, and those units can also be exchanged for WELLTOWER shares. This could be up to 868 shares. Finally, there's something about resale shares. It involves some 563,904 shares of common stock, which the company issued to pay for a recent purchase of some properties. The person who got those shares might sell them. There are many legal and tax opinions by Gibson Dunn Scrutcher LL, which are attached as exhibits to this filing. Now, let's step back and look at what's really going on here. WELLTOWER is a big player in the real estate market, particularly in senior living and healthcare properties. They own a lot of buildings and rent them out to healthcare providers and senior living operators. From this report, we see that WELLTOWER is setting up different ways to get money when they need it. The at-the-market offering is like having a flexible funding option. The exchangeable notes and downright units are tied to their past deals and allow other parties to exchange those for shares. The resale shares relate to a previous acquisition. The big question is, why are they doing this? Well, raising a lot of money might mean they're planning to buy more properties, pay down debt, or invest in new projects. It also might mean they think their stock price is pretty good right now, so they want to sell shares while they can get a good price. However, selling a lot of new shares could also water down the value of existing shares, which isn't great for current investors. It's a balancing act. On the other hand, if the company uses the money wisely to grow and improve, it could be good for everyone in the long run. Also, each of those exchangeable notes, downrates, and OP units might become shares in the future, but it is not guaranteed. Looking at WELLTOWER, there are definitely some strengths. They're in a growing industry with an aging population. They have a lot of properties and a well-known brand. But there are also risks. Interest rates are rising, which makes it more expensive to borrow money. The real estate market can be unpredictable, and competition is always tough. Overall, WELLTOWER seems to be positioning itself for growth. They're raising money and making deals. Whether these moves will pay off is another question. Investors should watch closely to see how WELLTOWER uses this money and how it affects the company's performance. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more insights into the world of business and finance. Until next time.